Are we having a dead cat bounce? And are we going to make lower lows? Or is this the beginning of a rally that'll last at least a few weeks and month? Well, we got some really important indicators in the S&P and in the NASDAQ that we need to talk about that pretty much lay out where this is going. And I'm going to show you the best markets in 2025 and the best sectors in 2025. This is where you want to be. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so let's start off with the S&P 500. Let's take a look at this. And we see we got one big new signal. It's really big and it's really bad. And that is this death cross. I assume you have heard or read about it. If not, it'll come up in the next days. It just basically triggered this week, basically in the past days. And when you have a death cross where the 50, which is the brown line, crosses the 200, the purple line, it's a really bearish signal. And let me show you how important this signal is. We gotta go scroll back here. Oh, stay with me. We're still scrolling. Oh, nothing has happened. Whoa. Okay, there's a positive death cross. All right, and if you followed that in 2023, February 1st, 2023. When was that? That was basically when the AI trade started to kick in, and you would have beautifully partied up all this rally. Now, where's the negative death cross, the last one we saw? Oh, still not there. Oh. There it is. 2022, March 2022, about 3 weeks after the Russian invasion in Ukraine started. So let's go before that. Where's the last negative death cross that we had before? Where's the small one here in 2018? You might remember the flash crash. That's why this was kind of a miss one. But then COVID, obviously, right? And each time you see it, after the death cross, massive sell-off. Massive sell-off. So sometimes you don't really need to overthink the markets. You got to take this very, very serious, right? So let's take a look at the NASDAQ and we'll see same thing. Death cross triggered. That's a negative sign, or one of the most powerful negative signs. So, do I want to go crazy long in this market? Absolutely not. And especially since we have earnings seasons right now, this week kicking off already with a bombshell in the Dow Jones, United Health. But next week is the big one. That's when we get the tech earnings. And with the VIX at 30, instead of where it used to be around like 12 to 18, that basically means we can expect major volatility coming up. So VIX at 30 means nothing else that the volatility of the markets will increase. So that means we gotta prepare ourselves for market moves of 5, 6, 7% in the indices. This is coming. And it's going to be no joke. We really need nerves of steel here. And it helps to take a step back and take a look at the different markets and how they have performed this year and look at the different sectors and filter out where the winners are. And I've done this for you. I've done the legwork. So here we go. Why is this camera picture of me down here? Doesn't matter. The most important thing is the data. And what do we see here in 2025? Gold, copper, silver. Those are the three markets. And then you have China. Then you have the DAX, the German index. And you go down, US, deep in the red. Japan at the bottom. Oil not working. Bitcoin not working. Obviously, if tech is not working, then Bitcoin is not working. But the story here is clearly gold, silver, copper. Those are the markets. That's where you want to be. That's where the action is going to be this year. Now let's take a look at the sectors of the US market. Look at this. Performance 2025 based on the closes from yesterday. Gold juniors, gold seniors on the top 2 spots, silver miners behind it, and then there's a gigantic gap, and then we're almost already in the red. Interesting. The second most interesting point after the fact that the action in 2025 is in the mining stocks for gold and silver is pretty much in the middle. You look at XLF, that's for the financials. Apologies that the definitions of the ETFs is written in German. This was for a German publication I did this for. So, XLF for the financials, it's down 3.7% year to date. That's not great, but that's also not terrible. What does that tell us? That tells us we have problems in the economy, clearly. We're probably going to have a recession in the US. We very, very likely going to have an earnings recession, which is basically 2 quarters in a row with declining earnings. The reason why we think we're going to have a recession in the US is basically at the bottom, the ITB, that's the home builders, and they're down 34%. That's kind of the first indicator that we have there. But the financials only down 3.7%. So what does that mean? That means what we don't have is a financial crisis. Don't listen or watch the YouTube videos of all these clowns telling you that the world is coming to an end and that the markets are crashing and that we're going to have the 2008 financial Armageddon and that the dollar is going to zero and that's the end of fiat currencies and all this bull. These people are in the business of creating panic headlines to get clicks. It's not useful information. This data is useful information, and this data shows us, yeah, we have problems in the economy, which is a normal cycle that just got extended through the quantitative easing because of the COVID pandemic, right? So it's coming now, but we do not have, when we look at the data from the markets, a financial crisis. Maybe it's coming later, but right now we don't have it. Second biggest thing is we want to use the weakness in senior and junior gold producers and silver producers to load up on these stocks. Don't buy the explorers yet. This is not the time to buy the explorers. And if you compare the explorers, and maybe I'll do that at some point, if you compare the performance of the explorers with the producers, you will see that the explorers are massively lagging the gold producers. Why is that? The gold producers, as the name says, genius marketing move by them, are producing gold. They're benefiting from the gold price right now. Explorers have nothing. They have some land, and then they're going to drill. And they're going to hope that they're going to find some gold there, and then they're going to make their estimates. But they don't profit from the higher gold prices for years. Also, they need a lot of capital. They need a lot of capital for the development of their projects. And it's high risk. This is a high risk business, exploration. Well, what is not popular right now in the market? Risky investments. We can see it with the tech industry and the tech stocks. So there's always money in the mining sector for good projects, but for young projects or for projects that might be okay so far, or maybe they have potential but not more yet, it'll be difficult for these companies to raise money. And that's the reason why the stocks are not working yet. At some point, when we reach gold 4,000, gold 5,000, which will happen, not in 2025, but in the years to come, then there will be the time for the explorers to shine. when the hype is taking over. And then we'll make a lot of money with the explorers, but not yet. Right now, senior producers, junior producers, some developers. Developers are companies that are not yet in gold production, but they're building the mine. They're very far along. They have a resource estimate. Sometimes they even have already like a mine plan and a financial plan how to build the mine out, ready to go. So these are the stocks that are working. That's where we want to be in. Why can they work when the S&P 500 and the NASDAQ are not working? Pretty easy. Very, very few mining stocks are on the S&P 500, and their weight is minimal. So the correlation with the S&P 500 is also minimal. Now, if we go in and don't buy the ETF, but we look at individual stocks, individual mining stocks, we can even pick out some that are not even in the ETF, so in the S&P 500. So then we have an even smaller correlation to the overall market. And that's the reason why we can have the outperformance in the gold mining stocks. That's it for today. You're going to get a video tomorrow. I know it's Easter Friday, but I wasn't able to get one out yesterday because, markets are banana crazy. So you're going to get a video tomorrow. Promise that. But if you're ready to already hiding the presents for your children, have a great Easter weekend. Bye-bye.